Good afternoon, everybody. Welcome to Eating the Elephant, where we talk about eating the elephant that is Hurricane Michael recovery. We break this elephant down into bite-sized pieces for you, and I'd like to start out by wishing everybody a happy St. Patrick's Day. I hope you've got some interesting and fun plans for tonight. My recommendation, of course, is always to go to Beef O'Brady's. You've got Pat Perno here in Lynn Haven, and at the beach, you fortunately now have Alan Cotton with a brand new Beef O'Brady's out there. They always have green beer and a good time on St. Patrick's Day, along with traditional Irish food. I have to confess that corned beef and cabbage is not my thing. I think it tastes like feet, but for those of you that are into to Irish fare, those are good places to go. Let's get right into some insurance issues. We've got several things. First of all, we had kind of an experiment on Wednesday. We just skipped Wednesday, didn't make a comment, didn't say a word to anybody. I was beginning to get the sense that maybe that these episodes of Eating the Elephant were beginning to be somewhat less effective, and maybe people weren't getting quite as much from them. And I thought, well, if we just don't show up for an episode, let's see what happens. I learned a couple of valuable things. Number one, I learned not to ever do that again, because I certainly did get some communications wondering where we were, and that was encouraging, I guess, on an interesting level. But the other thing I did find out, I think, is that the people that are out there that still have problems, I think, seem to have somewhat less intractable problems, and the problems that I see are of a smaller scale than they had been. Where we very, very early in these episodes, we're about 34, 35 episodes in now, we were talking about trees through roofs. We were talking about some pretty serious problems, and for example, I went and spoke to some folks today that are not my clients but good friends, and I was trying to help them with some things, and their problem really is about a $1,500 problem. That's a problem that I think is much more survivable, and I'm glad to see that the problems that we have are getting to be smaller and smaller, and maybe we are indeed beginning to get this elephant down bite by bite by bite. And so I hope that if you're having really big problems still, that you'll reach out and get some help. And if you're having small problems, I hope you won't just walk away from them. I hope you won't let things wear you down. And I hope you'll continue to fight for the money that's yours, and for the service from contractors that's yours. I want to talk a little bit. We've talked over and over and over about mediation. What I don't think I've ever told you is how I think you can be the most effective. It occurred to me that early on, I think what confused everyone here in this post-Michael world was nobody really knew what to do. No one who knew how to navigate the insurance world. Nobody knew how to find contractors and tell the good ones from the bad, things like that. And it occurred to me this week that I've never really told you how I think you can be the most effective if you need to go to state mediation with the Department of Financial Services. I would tell you the very first thing that you should do to prepare before you do anything else is prepare sort of a narrative. And what I mean by a narrative is sort of an executive summary of your case, just a page or two, and it doesn't have to be terribly formal. It can be bullet points, it can be a paragraph or two, just sort of in English what's going on with your case and why you need the Department of Financial Services help. You're going to send a lot of documents, they're going to ask you for an awful lot of information, but if you can hand to a state employee a 1 or 2 page summary of what the problem is that a reasonable person can understand, that will set you up for success. And I think that's your first step. After you prepare that, you're going to call the Department of Financial Services, and we've given you that number. You can certainly look it up online, and I'll post it again on our Facebook page. You're going to call and talk to someone there at the department that can give you a little bit of direction about their process, and most likely what they'll do is they'll take some very basic information from you over the phone, mostly contact information. You need to have your policy in front of you, so you can give them your policy number and your claim number. And then after that, you need to make sure that you have your documents organized. What I want you to do is to be sure that you have your bills, you have invoices that you've paid. If you've got a timeline of things, particularly if you've not gotten reasonable response from your insurance company, if you can explain and you can show with a little calendar or with a timeline that you've called, you've emailed, you've discussed, and you've not gotten proper response, that's going to go a long way toward getting that Department of Insurance employee or Department of Financial Services employee on your side and already looking at it through your lens, and that's what we want. I would say the other thing you need to do is be reasonable. This is not a lottery system. You're not looking for $1 million. what you need to portray to the Department of Financial Services is that what you are looking for is to be treated fairly and to recover the funds that are due you under your policy. And once you've done all that, I think you're going to find that you'll get direction from the department as to how they're going to proceed with you. There's only 20 days once the department contacts the insurance company for that insurance company to provide a response to the department. Now, it's possible that could get extended somewhat because they may respond to the department saying that they're waiting for additional information. They might be waiting for information from you. But in general, you should start moving the process along a little more quickly. If you have more questions, you can certainly contact us at the office during the week, and I'll be glad to help you with your specific case. I would say that if you're at the point where you think you might need mediation, but there is a genuine disagreement about coverage, and by coverage I don't mean how much something is. If this is worth $100 or $200, if you need 40 linear feet or 60 linear feet, if there is a significant item, significant dollar amount, that there is questions whether that is covered or not. I got to tell you, I don't think that's something that the department is going to be as effective at. I think at that point, if you have a serious disagreement over whether coverage attaches, that might be time to hire an attorney. That may be the only way that you can get your case resolved. Because what we are finding is where the issues are fairly straightforward and where there are disagreements over dollar amounts and your estimate versus the insurance company estimate, the scope, whether they want to, for instance, they don't want to honor the Florida matching statute and they want to put siding on part of your house but not on the other part of your house. Those kind of things are relatively easy for the department to resolve because they're very simple matters of law. If you get to very complicated coverage issues, particularly if you have a commercial building and you might have much more complicated policies involved, then I just don't think that's something that the department is going to be helpful with. I could certainly be wrong, but if I was in that position, I probably would go to an attorney. Now, we had some questions this week and previous week about wind-driven rain, what it is, what it's not, and why it's important. The reason people are asking this question is because they're being told by their adjusters, in some cases, that wind-driven rain is not covered. Well, everybody had damage due to rain in their building. And it was all driven by wind. The question is, what is the legal definition of wind-driven rain, and why is this important to you? In its simplest terms, wind-driven rain is water or rain that is blown into your home without a breach in the building. And what I mean by that is, if a tree comes through your roof and it rains in your house, well, that's wind-driven rain, but that is absolutely covered, and that is not considered wind-driven rain. That is considered hurricane damage. Similarly, if debris is blown against your window breaks, and you have rain intrusion into your house, that's hurricane damage. When they talk about wind-driven rain, you're talking about leaks through, generally, you're talking about door and window seals. If you just have a poorly sealing front door or window, and water blows against that for a period of time, and it leaks through those seals, that's determined to be wind-driven rain usually. And in some cases, it's not covered. Some policies will include this coverage. Some policies will not. Frankly, most don't. It often is not a big problem because most of the time wind-driven rain in normal situations can be cleaned up with a mop or a towel. But after Hurricane Michael, obviously, we did have some much more significant instances of wind-driven rain damage that might have been a little bit more significant, and people are a little more concerned about coverage. And I want to be clear here. Things such as water blowing through damaged soffits, rain blowing through damaged soffit, or through a gable end vent, through a ridge vent in your home on the top of your roof. If it blows open French doors, for example, and blows into your house, all of those items are covered, and that is not considered wind-driven rain. Where you have no breach whatsoever in your house, and you have water intrusion, that's sometimes going to be determined to be wind-driven rain. If you have specific questions about your particular circumstance, you're welcome to call me, and I'll explain what I can. Finally, I realize I've talked over and over and over about assignment of benefits, but it's come up again and again and again, and it's become a real significant problem lately. There's an awful lot of people, particularly on social media, that are defending the practice of assignment of benefits, and frankly, it's still a terrible idea. There are those out there that want to try to claim that assignment of benefits is a benefit to the homeowner, that it is something that is protecting a homeowner's rights, and that is simply 100% false. Assignment of benefits at its very basic level takes the rights of you as a homeowner, as a policyholder, and they hand those rights to a contractor. That's it. That's the very basic nature of assignment of benefits. That's why it's called assignment of benefits. Your benefits are assigned to someone else. We have something very significant going on right now. Excuse me. And I'm going to post a link to this case. We have a case right now with a local public adjusting firm that wrote a $66 million estimate on a $2.5 million condo loss. And on March 12th, the Daytona Beach paper wrote about this because it was from a previous storm. But I want to be clear on this. The owners of the condominium association, the governing board, thought that their claim was worth $2.5 million. They thought that was a reasonable amount. But again, a local public adjusting firm from Panama City was working this case. They went down and they hired a mitigation contractor, talked the board into signing an assignment of benefits contract, which took the board and the governance completely out of the picture. Lots of bad things ensued. The insurance company sued the mitigation contractor. The mitigation contractor caused a tremendous amount of damage. And again, the public adjusting firm, on a $2.5 million claim, wrote an estimate claiming that the damage was $66 million. Completely indefensible. So what happened was the association, first of all, their insurance premiums went through the roof. They were cut out of the puzzle. They were not allowed in the building in many cases. The president of the board was not allowed in by the manager. He wasn't able to get a key. It took the governing body and all of the owners completely out of the puzzle. The owners had to sue the public adjusting firm, and they had to sue the contractor in order to get access and to get them off the property. They were finally able to settle it. They got their $2.5 million. But if you look at it from the public adjuster's point of view, why would they do something like that? Well, a 10% fee on $2.5 million case is a pretty nice payday, $250,000. That's a better payday than I typically get in my office. But if they could get 10% of $66 million, that's a much bigger deal. That's $6.5 million. I think what that indicates most likely is fraudulent activity. I don't know all the facts of the case, and I'm sure the rest of that will come out because this, again, only hit the newspaper March 12th. Again, I'm going to post a link, and I'm going to let you read the article, and I'm going to let you decide. But it is one more shining example of why assignment of benefits is a terrible, terrible idea, and it needs to be fixed. It is my hope that legislatively this session will be able to fix the bad parts of it and retain the parts of it that homeowners, I think, need and want. Let's wash the bad players out and let's keep the good ones. I'll leave it there. Again, happy St. Patty's Day. I hope you have a good evening. And this time we absolutely will be back to see you on Wednesday.